All right. Looks like another up day. We definitely need to have some selling. Would be nice so that we can get into a few more positions, but it looks like we're going to have at least another day up. Futures pointing up. Let's see what we got here. Yeah, NASDAQ looks like it's way up. We got a good move on the ES as well. We just stick with the plan. You don't feel, the FOMO, the YOLOs plays. Don't get involved with the hype. You listen to the news. If you can't prove it, then what's the point of listening to it? Yeah, it's just can be very boring. But the best thing to do is once you've got a winning plan, is to stick with it. If you change from that, like right now, you could get this like, okay, well, look, this market's just going to continue up because everybody's saying it, right? It's the worst time to do it. Because everybody's screaming, no, it's going up. Now, is Pepsi going up? Maybe. Maybe it's staying the same. Maybe it's going back down. I don't know. But I don't make decisions based on that. I have specific rules that I follow. If you follow the rules, I'm going to put together an ebook so everybody can get a rule book. And then you can adjust your trading style off of it. It's about money management more than anything else. It's a matter of the size account. Everything is on scale. All we're doing is checking to see if there's any pre-market moves. So we won't have to look at charts. All we're really doing is looking at values, right? Everything that's to the left of this line, all we're concentrating on is this value right here. If it's up above our sell, we want to take a look at it. If it's below our 50%, we want, because we're going to be buying that, that's a 50% pullback. That's our next entry point. These are the type of things that we're looking for. We're not looking for, hey, something just took off to the upside, let's buy it. We're not looking at any news. We don't worry about it because all of these stocks fulfill our prerequisite for why we'd be involved with this company, why we'd be invested in it. It looks like Bitcoin is just kind of hanging out around the 57,000 mark, which is impressive, but there again, we have no idea where it's going. We don't guess. If you're a trader in Bitcoin, because there's really no investing going on there, because unless you bought it years ago and you're just going to hold on to it, but when are you going to sell it? You can sell it at any time, but then when are you going to get back in? It's not paying dividends, in my opinion. All you're doing is speculating. There's nothing wrong with speculation. I'm not saying it's wrong, but it should not be. It should be a small percentage of your portfolio. So if you wanted to, like, let's see, where's that one at? Here's a speculation right there, right? Because that was given to me. Right, on this small account, it's got one share. Now, yeah, well, it's doubled in price, right? So that's 100%, but it's a lottery ticket, right? Maybe it goes up, maybe it comes down. Doesn't pay any dividends. It was just given. There was a corporate action taken, and the shareholders at the time were given a percentage of warrants put into their account. You can see that it's been up, it's been down. Um, you know, it's just one of those things. It's just something that's in your account that you can just sit there and watch. I mean, this thing's not due till 2027. That's 6 years from now. You don't know what's going to happen. So why not just sit on it? Doesn't lose any value, other than, the price action. If you want to take profit, you take profit. If you don't, just sit on it. I mean, it didn't cost you anything. This is the type of stuff I'm talking about. But if you're not invested in the market or invested, if you're not diversified in the market, you can't take advantage of these corporate actions, because not every company has them, but many do. You get splits, so that's how you can double your money pretty quickly on a split. If it comes back up to the same price after the split, which a lot of companies actually do, not all of them. But if you catch the right company, then you can say, oh, that was a lottery ticket as well, and you can just sit on it. But majority of these companies, well, 99.9% of what I invest in is a dividend paying stock. So these small portfolios that you're looking at here, this just gives you an idea of what you can make. And if you follow this for any amount of time, you'll be able to see the power of dividends. So this portfolio is making 7.9% overall. This other portfolio is 631. Let's see what this other one is. This one is 8.99. Now this is constantly fluctuating, right? Because the prices are constantly changing, but the dividend amounts pretty much stay the same. They do go up and down, but it's not, on a daily basis. Turning to dividend payments, looks like we have looks like 14 across 3 accounts. So of course we're combining all of this, because this is what we're showing. We're trying to be transparent, so to give you a better idea of how to approach your accounts. We got about 20 minutes before the opening. I don't see anything that really stands out. We'll go back over here to Mosaic. Looks like another kind of, this one is a pretty cheap stock. Let's see, we're nowhere near the average price. This one used to pay monthly, now it's down to quarterly payments, but it keeps increasing the dividend amounts. And you can see we have 500 shares in there, so it's paying 48 cents, so that's about 25 or $250 per year, which is not too bad on 3,000. That comes up to, let's see, I'm in my calculator, 250 divided by 3120. Let's multiply that by 100. That's how you get your percentage. So it's 8%. Not too bad. That's just something you sit on. Now, look, it's got to go to 966. It's at 624. That's just to get back to break even. But if it sits in your account for, well, 8%, it would take a little over 12 years to, equal that amount that you invested. So if it never goes anywhere, then great. But what happens if the dividends keep rising? Well, you get there that much faster, right? And then that doesn't matter if you're upside down or not in this account, as long as it's paying you these dividends, right? So that's the power of it. So you have to be okay. If it comes back up to even, I know that we're probably over on the amount of shares here. So what we'll do is we'll cut it back to what the max shares are, and I'm not worried about it until it gets back up to the average price zone. So you look at some of these others that we're invested in. Now you can see that's the average price. The shaded green line, that's the average price we've paid. So we pay attention to the ones that are around this area, we don't adjust anything here unless we see a price spike. Right? It doesn't happen all the time. People are looking for that quick fix, that give me some of that crack cocaine. They want that feeling that they're achieving something. But it's better if you can average, at least one sell every day, and at least you're getting paid dividends. If you can actually see it every day that you're making money, then it becomes more apparent. It's not it's not being right. It's just having that positive reinforcement. But if you're constantly getting beat down with sell, sold for a loss, win, sold for a loss, sold for a loss. It can be a very detrimental thing to your account, because everybody wants to be rich and be a stock trader, and you hear all the stories. And there's people all the time that lose money constantly. There's a lot of quick ways to make money, but a lot of them tend to be pretty illegal. And if you have any experience in trading at all, you'll understand who you're up against. You really are up against computers, algorithms. The speed trading is just, it's unbelievable. When you start getting into high value stocks, unless you have large sums of money, it's very hard for you to make money on these movers. So what does people change to? They change over to options. And there's nothing wrong with options if you know what you're doing. So learning curve on that is about 18 months. The simple options trades are pretty simple. It's just a buy, a sell. But if you understand the nature of options and theta decay, you're better off selling options than you are buying options. It's a very intricate product, and it takes a lot of know-how and experience to get good at them. You get in a larger account and you get over $1 million, I would say that you can do well, but most people are looking to sell an option to take a position. They're looking to make interest off of those weekly options until they actually acquire it, because the position or the stock price went against them, so they take possession of the stock. And there's nothing wrong with doing that. It's just a different approach. I like the approach of not losing money at all. And that would be the only options that I do trade, would be to sell puts to get into positions on larger accounts. These positions are too small. I don't want to wrap my money up in it, and I don't want to take losses. So, just one contract is equal to 100 shares. So if you have, if you're trying to trade something like LMT, and you say, well, I want to sell because I believe it's going up. Well, if you're wrong and it comes back down and it's put to you, you've got two options. You can either sell it for a loss or you take possession of it, but now that 100 becomes $34,000, right? Well, if your account is $67,000, like this one in particular, that's half your account. Now, if you know something that I don't, is it going up or is it coming down? We don't know. You might be stuck with it. At least you'd have 100 shares making you, what is it, $10 or $11.40, or $10.40 per year, right? So at 100, you make $1,000. Well, that's not all that bad, because this is a decent dividend-paying stock. So you can look at options trading and say, okay, what's LMT? What's the weekly? Well, until it opens, we won't have those numbers, but they don't put those up there. You can get that on other platforms. I don't go off of information that's not accurate. So if it's not live, then I'm not interested in it. But the whole idea is to, look at the size of your account. I put together a video about, reverse engineering how you get to $1 million. It's be kind of eye-opening and how little that you have to do, but it's a time element, you know. And yes, there's some luck involved in there. Every once in a while, you get that split or a large increase. You're not confined to making the dividend amount as your target price. I mean, a lot of times we take profit quite a bit higher than our original target price because price can jump. They call it gapping. Some people look at it and they never put in a limit. They're just like, well, I'm just going to let it go and see how high it gets. Right? I have a friend that works at Energy, and see he's starting to recover now. But I told him back over here. I said, if you've got all those shares, you should think about selling some of them. I'm not saying this at the high. I don't remember when I talked. It could have been in here or whatever. I was like, it's smarter to keep buying and selling those positions, right? Because the occurrences are what's going to make you the money. I mean, if you've had these for years and years and years, let's say you have 10,000 shares, right? And it went all the way up to here, and you're just sitting on it. You say, well, I'm just going to keep on giving the dividends. And no, there's nothing wrong with that. But if you had a plan, say, well, if it dropped 10% or 20%, I'm going to buy back in with those same amount of shares. But I sold them up here, and I'm going to buy them back when they come down here. And sure, it could have went up, it could have went down. But the plan is not putting all your money or your eggs in one basket. Once you get diversified, you see the power of the dividends and the power of the protection that it gives you. But too many people get focused, laser focused, and I like to take the shotgun approach instead of the sniper approach and trying to make $1 million off of one stock. That's true. There's a lot of people buying and selling like penny stocks and things. Um, Very dangerous, because what ends up happening is because the price is so low, you have to buy a lot of different shares, a large sum of shares to make any money on a move. And the same holds true when you're looking at. You don't have to buy as much on the other end because it moves so fast, but it all comes down to volatility. If you're buying like a $500 stock that moves $25 a week, then that could be your target price, and you're saying, okay, what am I going to use? How much money am I going to make? You have to start thinking, but nobody ever thinks about their risk. They don't think about that should be the number one thing. What's the size of my account? How much can I afford to lose? Well, I don't want to lose anything, so I design my portfolios not to lose money, right? Now, there's always a chance a company can go out of business. That's the only way I'm going to lose money. But as long as they're paying dividends, that should be your number one criteria. It's like, hey, this company's paying me dividends. Now, it may not be what you think you ought to be getting, but it is what it is. Take what they're giving you, but don't put all your money in one basket. Spread it out. You'd be surprised how fast it adds up. Almost time for some more tea. I know all the young people out there, they want to get that money so they can buy that Ferrari. And that's fine. It's good to think that way, I guess, but that's where you're manipulated when you're young. Everybody tells you you can make $1 million, trading in the stock market. Well, just look around, like research that. How many millionaires have been made on the market? They're your age with, let's say they have $1,000, $5,000, $25,000. Maybe you inherited $100,000, and you hadn't got the first idea what to do, but you want to make $1 million, and you start trading it, and it can dry up pretty quickly. I was 20 years old and I had $100,000 cash. The first thing I'd do is put it into, I'd spread it out between all the dividend paying stocks that I could get my hands on. Yep, not seeing anything special this morning. I think TLT's back down a little bit. XEL, Kellogg moving a little bit. I think we'll probably see a pullback eventually, but God knows when that's going to happen. It's all up to the big players, man. You and I, we're small traders. If you've got $1 million in your account, you're a small trader. So if you've got 10,000 in your account, you're at a distinct disadvantage to the big players in the market because they're the ones that move it. You buying, 100 shares of something is nothing. It's nothing in the market. You can't even, how Bitcoin goes to 8 decimal places. Yeah, you're probably more likely to be in the, 20th decimal place to the right. It's that, and there's that much money being transacted. So don't think that, you buying something in the market is affecting the market. It's not. Or selling it. It doesn't, you're not affecting it at all. So the best thing to do when you have a small account is to diversify and take as much money out of the market as you can. You're underneath the radar, but you start coming in with 10,000 shares, you're a big player. We're talking in, legit stocks, not penny stocks. Penny stocks, that's pure speculation. They're not companies. They're not paying dividends. They're not making any money. It's pure speculation. Maybe one day they do. Maybe you get lucky. If you sit on it, you can buy some penny stock, buy 10,000 shares, put $100 up in it or $1,000 up in it and say, oh, I'm just going to sit on this and hopefully it goes to the moon. I don't know what your chances are. Never looked into them. Don't care. I know some people have gotten lucky with that. Next thing you know, it's $50 a share and you got 1,000, you got $50,000. It's highly unlikely though. All I know is I get 100% return on my money. I shouldn't say 100%. What I mean is 100% of the time I get paid. If I'm invested in something, I don't have to be right. It can go either way. One thing, there's 3 things that can happen. I'm either going to get a dividend payment, the stock price is going to go down, and I'm going to buy some more. Therefore, I'm going to make even more dividends. Or it's going to go up to my sell limit, and I'm going to sell, and I get my money back plus the dividend amount that I was targeting for the year. It's pretty simple. And as your account size grows, then you have more positions. When you get up into a higher account value, then you start doubling those amounts that you're returning. Just a numbers game. That's all the stock market is. But don't be fooled. All this free money that's running around. Look, they could keep pumping money into the market for the next 10 years. We don't know. But if you're short in this market, you're probably, well, there's been a lot of money lost. That's all I can say. All right, I gotta go to the bathroom real quick. So we're fixing to open. Let's see what the markets give us today. And we're open. pretty slow morning. Maybe we'll get some action between here and the close, but we'll be back on in the afternoon for the last half hour just to wrap up the day, answer any questions. But until then, got about a minute left. Doesn't look like there's too much moving very quickly. We do have a good dividend paying day. 14 are going to pay ex-dividend today. These three accounts pulled in another 1049. I have to make a little chart on dividends coming in and the amount of trades that are actually making money. It should be an interesting looking graph, barring the overall portfolio gain, because that's pretty meaningless. But yeah, other than that, have a good rest of the day, and we'll talk to you later.